Hey, thanks for joining. Today, we're here to discuss a very crucial step involved whether you're selling or buying a house, and that's the title commitment. Now, you want to obtain title insurance from a reputable company, and there's a lot of them out there. However, a lot of them are underwritten by First American, my title company of choice. And fortunately, I have a few friends on the inside. Marx? Hey.
This is Marx Elias with First American Title.
Thank you.
I've been with us for, just shy of 20 years now. So seen a lot in my time and seen different markets. So the beautiful thing about working with First American Title is we're a publicly traded company. We've been around for over 130 years. So good times and bad, we've seen it all. We've always come through in the end. And we are very knowledgeable. We have the resources behind us in terms of a publicly traded company, but we have that local feel because we're part of our community. And so we're small, and at the same time we're a large company. So yeah, we've seen a lot. We're not the sexiest thing when it comes to real estate. There's no TV shows on title insurance, but we're giving you peace of mind knowing that when you buy that home, nobody's going to come knocking on your door months later, staking a claim to your property. And we also act as a settlement agent. So all funds coming in, all funds going out, and we try to make it a smooth transaction for all parties, from realtors to lenders, buyers and sellers.
Excellent. Great. Quick question. So Mark, are you folks just in Michigan or are you in other states?
We're across the country. I have international operations as well. In the state of Michigan, we're just under 30 offices across the state. And like I said, we've been around for quite a long time.
Okay. Now, I see on your website, you folks got a ton of products. You got like 1031 exchanges. I seen something on there, UCC stuff. You do all kinds of stuff. But today we're here to tell them, about the real estate process, the different products you have. So what kind of products do you provide for a typical real estate transactions?
So in a typical real estate transaction, there's two policies that are being provided. One's an owner's policy, and that's being conveyed from the seller to the buyer, giving them clear title on the property. And then the second policy is what's called a mortgage or a loan policy. And that is paid for by the buyer, but to protect their lender's interest. The lender, as they're giving the buyer a loan, needs some sort of guarantee that they're going to be in first lien position should the buyer ever default. So there's typically, with a mortgage purchase, there's two policies: a mortgage policy and a owner's policy.
Okay, great. So what does the policies do? What do they?
So the owner's policy is really it cures all liens and claims against the property.
Oh.
So you don't want anybody from an old lender, old contractor, an attorney that might have worked with that seller that could file a lien against the property, right? All those people that can do that's a possible lien, right? And then you also have tax liens from the federal level and the state level. So we want to make sure that all taxes are paid. Another possible lien that people don't even think about could be a child support lien, right? So if a homeowner is delinquent and doesn't pay his child support, they could lien his property. So there's so many different ways, whether it's even credit card companies can lien a property. It's not common, but it does happen. So there's definitely many ways in which somebody can lay claim against a property.
Mark, I love you, man. You are the greatest, man.
Thank you.
I've been working with, I've worked with residential buyers. I'm working with some commercial guys. Guys are interested in big stuff, the multi-families, all that kind of stuff. But one thing in particular I've been working with on the residential side are investors, and they've been picking up the tax title properties. Been getting them from Wayne County and things like that. And, some folks, some title companies can't handle them. Some require, they're like, hey, you have to go to court to get it done, this and that. But I've been very successful with you guys dealing with those. That's why I send you pretty much all of my business.
Thank you.
You're very, very welcome. Now tell them about that tax title process. Tell them about it.
So what happens when the county forecloses on somebody for non-payment of taxes? They do it by sending notice to the taxpayer address that they have on file.
Okay.
So the issue and the risk comes in when there could have been somebody else that might have had an interest, whether it was unrecorded, whether it was they were never provided notice, right? They lived at a different address. They didn't file their lien prior to close, but they still had that window to file a lien. So that's the risk. And so we saw that there was a need for something other than, or an alternative to quiet title, which can be very costly and take a few months to handle. So we came up with our tax title clearance team, and we do it very inexpensively, and we've cut the turn time on that, I think, as you know, probably by about 75%. So it is quick, cheap, and we have a very, very high success rate. So we're pretty proud of it. It's we'd like to think we help change the local title market here with that product.
Yes. I had another situation. Me and the ladies here closed. It was a couple where deeds weren't filed properly. Some folks had died in some transactions, and it came down to, hey, Nate, you're going to have to do the best you can to get this done. So it's also good when you're partnering with some parts, you're partnering with good realtors, good title professionals, good inspectors, everyone you can, because I had to run down everyone in the world to try to find.
Yeah, without a doubt. That's why we love working with you, Nate. I mean, it is it's very difficult, right? It is probably the most difficult and most hectic time in a buyer or seller's life when they're buying or selling a property. And a lot of times there's issues, and those need to be cleared up. But those can't be handled by the wave of a magic wand. We need people to get invested. And that's why working with you, we know that if there's something we need from your clients, or we need you to jump in and help us find a resolution, you're willing to work with us. And we can't have enough clients like you. We appreciate you immensely, and we thank you for that.
Thank you. I thank you guys so much. I appreciate you guys so much. One last thing. I noticed there's like two different policies that you have. You have a standard and you have the Eagle policy. Can you tell the viewers a little bit about that? What's the difference?
So the basic policy is typically what's been the standard for years, but they came up with we call an Eagle policy, or advanced coverage policy. It is typically 10% more than the basic policy, but it does cover different scenarios that wouldn't be covered by a basic policy. One of which is a homeowner that made repairs or improvements to a property without pulling the necessary permits, right? So I'll give you a real life example of what happened. Somebody bought a property, they had a sunroom or a Florida room there, and they wanted to expand on that. The new owners did. So the new owner filed a permit with the city. City sent an inspector out, and the inspector didn't recall anybody filing a permit for that sunroom initially. So they pulled up the flooring, and they noticed there was no subfloor. So that's a code violation. And so they literally had to tear down that sunroom. And the homeowner's frantic. Obviously, the first thing they do is reach out to their realtor. Right. The realtor remembered, hey, I think we have an Eagle policy on this. They came back, and then because we're the insurer, we covered up to $25,000 in the repairs with a 1% deductible. So, I mean, the buyer was extremely grateful. The realtor was grateful. Both could kind of sleep better at night knowing that they were protected. So that's one of the things. Post-purchase forgery. The policy actually increases in coverage for the first 5 years, so it can go up by 10% every year for the first 5 years. So in an increasing market, with a basic policy, your coverage is only what you had purchased, right? But on an Eagle policy, it could increase by up to 50%. So it's definitely worth the small difference in price to have.
Pays for itself.
Absolutely.
Great. Thank you so much, Mark. Appreciate the time. Let me get in here and shake your hand, man. I
appreciate it
so much.
Thank you, sir. Thank you
very much.
Anytime.
And folks, thanks for joining. If you ever need any help, real estate, give me a call. I'll be working with the best. I'll do my best.
You'll be working with the best.
Thank you.